I am fed up. I'm tired of seeing my gas prices at the pump just go off to the moon more than my crypto bags, okay? I'm tired of going to the supermarket and finding that my price of eggs are just doubled the $300 grocery bills. I'm tired of looking at these houses. I'm like, I want to see if I could try to move, and everything and all the prices have just gone up and up and up. And this is called inflation. You and I, as investors in the crypto market, need to understand inflation, okay? And I'll explain why we need to understand that and why we are in the crypto market to begin with. But just so you know, inflation is this thing that goes up, okay? It makes everything more expensive. It makes it so that we are poor. We can't afford as much as we could a month ago and a year ago. And it's actually going so fast that it could be like last week. I'm like, what? Why did raspberries go up so high? And so I'm gonna take a chicken and I'm gonna buy it, I'm gonna put it in that closet here, and I'm gonna wait for eggs to come out of its butt because I'm tired of paying for high priced eggs. And now President Biden has given us 2 reasons to why inflation is so rampant. And let me see if you can agree with these 2 reasons.
But first, I want us to be crystal clear about the problem. There are 2 leading causes of inflation we're seeing today. The first cause of inflation is a once-in-a-century pandemic. Not only did it shut down our global economy, it threw the supply chains and demand completely out of whack, especially in countries where more effective recovery responses weren't available, especially in those sectors that rely on semiconductors. These supply challenges have been further hampered by the onset of Delta and Omicron viruses. And you've all seen it, you've all felt it. And this year we have a second cause. Mr. Putin's war in Ukraine. We saw in March that 60% of inflation that month was due to price increases at the pump for gasoline.
Okay, so he is saying that there's 2 reasons. One, supply chain issues locked in by the pandemic and the lockdowns, and which is totally true, right? That is an issue that we were having, especially before last year, before the year ended, like December and stuff like that. We started to see some inflation in the market, and that's because of supply chain issues. Things are getting more expensive. So that's definitely one thing. Second thing definitely doesn't help, and I think it adds to the problem, is the war in Ukraine by Russia, and it's this whole thing where all the manure is in Russia not being exported, all these exports like wheat and stuff like that not being exported, even the gas, all that stuff, it has to deal with it. But he only listed out these 2. He failed to mention, I think, is the biggest reason, and that is money printing. Inflating the market, pushing more money into the market by just making up and printing money. This is something that the Federal Reserve can do at any time, okay? This is something that they just print it out and just create it and send it out. And we see President Biden's, he's just kind of passing the buck here when he could just really magically create the bucks. The problem is that there are well-known, time-tested investors who are saying the exact opposite from what President Biden is saying. His name is Warren Buffett, and I have just a quick video to show you about that.
So on. It's a fascinating time. We've never really seen what shoveling money in on the basis that we're doing it on a fiscal basis while following a monetary policy.
Shoveling money.
Something close to 0 interest rates, and it is enormously pleasant. But in economics, there's one thing always to remember. You can never do one thing. You always have to say, and then what? And we are sending out huge sums. I mean, the President said it on Wednesday, 85% of the people, we're going to get a $1,400 check, 85%. And a couple of years ago, we were saying 40% of the people never could come up with $400 of cash. So we've got 85% of the people getting those sums. And so far, we've had no unpleasant consequences from it. I mean, people feel better. The people who get the money feel better, and people who are lending money don't feel very good. But it causes stocks to go up. It causes business to flourish. It causes an electorate to be happy. And we'll see if it causes anything else. And if it doesn't cause anything else, you can count on it continuing in a very big way. But there are consequences to everything in economics.
And that's it. He says that there are consequences to everything you do in economics. It says they won't change anything until it feels like it hurts. And now it's turning. So that's why we've seen these recent rate hikes in the from the Federal Reserve, and they have been very aggressive rate hikes. 50 basis points, 50 basis points. Like we're going to expect 50 basis points in the next few weeks here. But that's what Warren Buffett said. Like, he is one of the best investors in the history of the world, and he's saying we are shoveling money to people to everybody, right? And people didn't have $400, couldn't scrounge up $400 cash, and now they're getting $1,400 checks over and over and over again. Where's that money coming from? Okay, and there has to be what the consequences are is people are happy, and they get the votes. Is what he's. So now we have seen the Federal Reserve turn into a political pawn, okay? But even more so, we have another celebrity investor here in Raoul Pal, and he is someone who said, explains out why we are poor because of this, like the short-term payment. It makes us all poor in the longer term, and this is what causes cowboys like me to be very angry.
Bigger thing. So right now we're seeing high inflation. We're seeing inflation at 8%. So then you're really behind the game unless your salary goes up enough and you can start saving more. So everyone's behind the game. But then there's another crazy thing happened when interest rates hit zero and we got to 2008, that famous financial crisis. The central banks started using something like the Federal Reserve, being the central bank of the United States, started using a different way of trying to stimulate economic growth and save the banking system. And that was called quantitative easing, which is a fancy word to say we're going to print more money.
More money.
And when you print more money, you devalue the money. So to put it in layman's terms, if you are really thirsty and somebody says, well, I've got a bottle of water, I'll sell it to you for $5, you'll pay $5. Mm-hmm. If somebody gives you 1 million bottles, it's worth nothing to you. In fact, you pay somebody to get rid of it because it's cluttered up your entire house. So things that are, if there's too much of something, it becomes valueless or less valuable. Mm-hmm. So 1 Mona Lisa is valuable, 1 million Mona Lisas, not valuable. And that's what's going on with money. They're debasing it, which means that they are lowering the value. Now, you don't see it very easily. All you see is that these asset prices keep going up. Every time they do this quantitative easing magic, the price of the stock market goes up, and the price of housing goes up, and the price of crypto goes up. And everyone's like, well, I can buy less of it now suddenly, but my income hasn't gone up. That's debasement. So you're now poorer and you didn't realize how it happened and you don't understand it. And it makes people angry because they don't understand why they can't get ahead.
And I think that's what it is, right? Last year we saw this massive run up in crypto markets because you and I are in crypto, but that was because people were getting more free money. And now I think it was artificial because now everything's restricting, everything's contracting. And it wasn't just crypto, it was the stock market as well. It was just this massive influx in cash, and it just shifted the whole market. And now we are paying the results of that. We are paying the price of the results of that just shoveling in of money into the market, into people's hands. And now everything is way more expensive. And who knows for what long-term damage we have done with this. Now, I just want to pull up two more clips here because just to show you just how magic this quantitative easing and this money printing that they could do, and just how crazy it is.
Simply flooded the system with money.
This is Jerome Powell. He's the chair of the Federal Reserve. Let me just back it up here.
Simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we as a central bank, we have the ability to create money digitally, and we do that by buying treasury bills or bonds or other government guaranteed securities, and that actually increases the money supply. We also print actual currency, and we distribute that through the Federal Reserve banks.
Simply,
you just print it. Just literally just say, well, yep, we do that. That's exactly what we do. We just create it, and we just print the money, and we just distribute it. It's like if you put together what Warren Buffett was saying and Raoul Pal was saying, and you see just the blatant just creation of money, that the power, the epicenter of power, the money printer, The people who can create that money, create that power, create the thing that enslaves us all and shackles us down because we have no other option, right? We have no other option. We all operate off of the dollar. Even if you're overseas, if you're watching me in another country, you are operating off the dollar because your currency is still trading with it. That's the number one thing. And so you should be even more angry with what they're doing because it messes with us. You're so far away from the money printer. Us Americans are a little bit closer, but we're still angry. It's the politicians. It's the people closer to the epicenter of that money printer who get their hands on that first because the market hasn't priced that in for them. They get their hands on that first and then they go spend it. And then it goes and then it gets to your countries out. And then that's why we see such crazy levels of inflation. So let me just come to the point of this video. What can you and I do? What can you and I do? Is there any hope? Like we said, we don't have a choice. Or do we? Enter in Michael Saylor, please educate us.
They're not going to stop the problem of currency collapse. They're just going to create a near-term turbulence. And if you're a trader, you may get caught in that turbulence. But ultimately, if you're an investor and you're concerned about preserving your wealth to give to your children or your grandchildren, then whenever you're in an inflationary environment, your strategy is simple. I have to convert my weak currency into a strong currency. Ideally, convert my weak property into strong property. And I think one of the obvious things is digital property, right? If I created a city in cyberspace with 21 million blocks and nobody could make any more, and it was going to last for 1,000 years, and it was the dominant city and everyone wanted to live there, would you want to own one of those blocks? And I think the answer is yeah. And that city is called Bitcoin.
Bam, mic drop. That city is called Bitcoin. Guys, here's our option. We can't control when they print this money. We can't control if they distribute or not distribute. We can't control the Fed interest rate hike. We can't control any of that. But before Bitcoin, we couldn't say no. Now with Bitcoin, we could choose something wholly other altogether that they can't touch. We could say no to fiat, and we could say yes to Bitcoin. Thanks for watching. I'll see you in the next video.